You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. It's March 24th, 2021. Well, the person you're about to hear from is frustrated by these precious metals markets that make absolutely no sense whatsoever, or do they? What do you think? What's your opinion? Should we all just sell our metals and get into Bitcoin and just ride it till it goes to infinity? Why don't you send me an email and let me know, kl@kerrylutz.com. That's the email address. And our good friend from themorganreport.com, David Morgan, is with us. David, we've been having these conversations for a decade now. And yes, metal prices have gone up and down, but something about $30 and reclaiming and exceeding its old record high. Silver won't do it. And now gold is breaking down a bit. Gold is below its 50-day and 200-day moving average. What are we seeing here?
Well, frustration, as you said. I mean, what we know about the silver market factually is, the retail supply is very, very minuscule relative to the demand. Is there silver out there to be purchased? Yes. Do dealers have inventory? Yes. But it's very, very small, again, relative to the demand. Then you have, the U.S. Mint that's basically changing how they're minting with this security feature, and that's kind of curtailed production. And then you have big mints that are saying different things, and I don't want to misquote any of them, but the idea is very simple. There's a lot of demand. There's not much supply on the physical side, and yet the price stagnates in this trading range somewhere between 25 and 27 round numbers. And everyone's asking the same question, how can that be? And the answer is because of the way the market is structured. I think Rick Rule just did a interview that's got posted up on Arcadia Economics, and I'm not saying that as a competitor to you, Kerry. I think we all kind of have the same interest in learning as much as we can. And he said it rather gently, but clearly that, this market does not act normally at all. Probably hasn't for years, and especially right now with all that we know. Gold is a bit puzzling as well. We do know central banks have been offering some physical. We also have seen the gold market curtailed some enthusiasm with a lot of well-known, well-heeled billionaire types talking about Bitcoin being gold 2.0, and some of these people with a lot of clout talking about selling all their gold or some of their gold and going into Bitcoin. Has that had an effect? I'd say, yeah, it has had. How much? That cannot really be determined. But there's pressure on both these markets to the downside, and yet there is never, and I've said this before, but every day that goes by is a new day. So I'm not trying to make an excuse. The point is that the fundamentals have never been stronger. We've never seen such problems with the debt markets and with the benchmark, the 10-year Treasury of the U.S. market, having pressure going toward the 2% level where it's been once recently. And it got that high, and the Federal Reserve Board panicked and started lowering interest rates. So they couldn't even get over 2%, which from a historic perspective, 5% yield on the 10 years out is, kind of a normal. I mean, if you normalize that curve over a long period of time, you'll see that these interest rates that we have that have been so low for so long, the zero interest rate policy has been a methodology to continue to expand the debt to infinity and not have to pay much more than a very minuscule part of the interest because the interest rate on the debt is low. Once an interest rate on the debt goes higher, then you've magnified the problem substantially. So probably said enough. I'm frustrated. What's it going to take? I think just conviction, continue to buy physical. Anyone that's got an allocated account, make sure, unallocated, go to allocated. The Perth Mint, I guess, did an interview. I didn't have time to watch it yet. that basically explained why their 10-day policy of going from unallocated to allocated is merely a transfer of paperwork and nothing to do with how quickly you can obtain your silver. I'll use silver. It could be gold as well. So back to you. I'm sure you got a lot of questions and a lot of ideas. So let me give it back to you, Kerry.
Okay, so we're looking at these so-called allocated accounts. Who's gonna watch the allocators here? Perth Mint supposedly has auditors and they publish reports, but how many of them out there don't?
Yeah, well, that's a great question. I can't off the top of my head quote, but I did an interview recently with As Good as Gold Australia, and I gave an analogy about how the COMEX actually works as being more of a showcase or showroom feature rather than a real warehouse full of silver ready for delivery. Most of the silver that's in the warehouses is there bought and paid for. Long-term investors put it in a vault that they trust with a bank's name on it that they trust or a depository's name on it that they trust. The actual free silver, the dealer inventory, the registered category really isn't that large relative to the demand that we're now seeing. So the audit thing, going back to the analogy, I talked about the car. And what was interesting is one of the respondents to that interview said, and I can't quote it exactly, but it was very funny. They said, and I forget the name of the automobile, but there was a limited amount of them. And what they did was they had a showroom, and then out in the lot, they had 300 cars. And so people could go look at the cars out in the lot. And then they moved those same 300 cars to the next city over when they did another display. So they counted their inventory as 600. It was really only 300. But, and I've said that for years, location doesn't prove ownership. Just because all this silver's in London doesn't mean that the LBMA owns it. It just means it's resting in LBMA facilities. Right. And the same thing with the COMEX, just because it's, in the COMEX doesn't necessarily prove that it's owned by let's say, the bullion banks, be owned by, whoever has a claim on it, whoever has title to it.
Hey, let's not forget the COMEX has become a delivery market recently, especially in gold, right? They're actually delivering record amounts. Now, obviously, the hedging that takes place, the bullion banks are buying future deliveries of bullion because that's the only way that a lot of miners can get financed, right? They can't just go and say, hey, let me take out a $50 million loan and we'll just give you the keys to the mine and the offices, and that'll be our collateral. No, the bullion banks want them to pledge their future production, and many of them out there are hedged. So there is metal coming into the market, right? But it's leaving at a pretty prodigious rate.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Exactly. I mean, in a real free market, it would balance out pretty much the way it should or could. But as one of our cohorts has says, there aren't any markets. It's not the gold market, the silver market, it's the treasury market, it's the financial, it's the debt, it's the housing, it's you name it. The stock market, I think, is the best example. These are basically machinations and gambling and pure rank speculation more than they're real markets. Everything's gotten exaggerated. You can do so much with leverage now in these markets and all of them, that there's no base of reality anymore. And that's the problem. And this is what you see in a hyperinflationary environment. The pricing of something becomes almost impossible because the amount of currency gets pumped up to the level where it has very little meaning. So no one really knows how to price things. And a lot of the Bitcoin proponents have said that's what Bitcoin is indicating, that you're in a situation where, you can't really determine the price because the amount of funny money that's out there circulating that hasn't really landed anywhere specifically. Some is landed in Bitcoin, obviously, but that final landing where I'm getting out of something safe like the Treasury market from the United States and into something I trust like gold, as an example, could go into housing, could go into stocks, could go somewhere else. But that final vote is just starting to take place. And I've always made the contention and the projection that there will be a run to gold like there's never been. And it's not because the psychology has changed. Most people, especially outside of North America, intuitively know gold has intrinsic value that's lasted for thousands of years. It's just that the party is started and there's no place else to go. So, the everything bubble, just think about the everything bubble bursting. So when everything bursts, all the go-to investments, the debt market, the credit market, the housing market, the commercial real estate market, the commercial bond market, sovereign bond market, stock market, where you go? Well, there's actually only a few places. You could go into cryptocurrencies and you could go into the precious metals, and that's about it. Are there other places? Of course. But the main thrust will be there. And if you compare the size to, let's say, what's in the benchmark 10-year bond and what is in the availability of the gold supply, you're looking at a big mismatch. And that's why you really can't put a price on this, especially when the currency becomes less and less trusted, which, of course, that's happening as we speak. So I think it's really good to point out that the last place you want to see a delivery come off is the COMEX. That's sort of, in my strong opinion, a little bit of a hint that things aren't exactly as easygoing in the gold and silver markets as the price might indicate.
Yeah, and right, because the COMEX was always a hedging market where the participants, the fabricators, the miners, the jewelers, the manufacturers, they all came to basically shed their risk, to spread their risk out. And the idea of contract executing your futures contract really was, I don't want to say unheard of, but it was relatively rare in light of the number of contracts that get traded. And somehow, right, all of that has changed in the past, I guess, almost a year now, right?
Yeah, I think you can go to Craig Hemke and get a better feel. I do look at the commemorative traders almost every week, but miss a few. And I do see what the inventory changes are like. I keep a pretty good track of that. But yeah, generally speaking, it's been a while. And it's slow, and it seems to be accelerating. I'd have to look at 2 more months' data to say, yeah, it really is accelerating. But, you get a blip or you get a 1 month where there's a lot, and the next month it falls back to normal. So it's hard to say.
And it was like delivery was always every 3 months, right? The big delivery months.
Yeah. There's a certain months that are considered delivery months: May, September, December. I'm leaving one out. But anyway, yeah, there are 4 months a year that are considered delivery months.
Yeah, and they're different for gold and for silver. They're 1 month apart.
Yeah.
One's March, one's April, and it goes like that for the rest of the year. So interestingly, though, deliveries have picked up, and that's where you buy the big bars, right? So there aren't retail investors going there, and that's where the price actually gets set. But what are premiums looking like at bullion dealers like Miles Franklin, who we only buy bullion from?
Yeah, well, there's 2 markets, really. I mean, there's a silver market, which means commercial bar market, and then there's a retail market, which is a spin-off of that 1,000-ounce bar getting turned into a 1-ounce wafer, or a 10-ounce bar, or a 100-ounce bar, or a kilo bar, or a government-minted coin, or a privately minted coin known as a medallion or a silver round. So all those products stem from the mother silver market. And you don't see any commercial bars used for investment except for the investment class of basically the ETFs, the ETPs, the exchange-traded products. Yes, there's big investors. I mean, when Warren Buffett bought 20% of the world's silver supply, he was buying silver, commercial bar silver, and he bought almost 130 million ounces of it. And ironically, it got shipped to London. And ironically, JP Morgan was a custodian for it. And ironically, when the iShares Silver Trust started, it was by JP Morgan with 130 million ounces of silver. But, I don't believe in coincidences. You can draw your own conclusion. But coming back on point, it's tight. The price is not really reflective of true market conditions. And we all know that. And the problem I think that the shorts have is they have leverage too much. I mean, if they're really hedged, they shouldn't care. I mean, if you have you have $2 billion exposure to the silver market and you're hedged, for every dollar that you're losing on the futures price, you're gaining in the physical market. So you don't care. You're net zero. That's what a coin dealer does. When someone buys 1,000 ounces from them, they go into the futures market and hedge it at that price. So that if there's a failure to pay, which happens occasionally, then they're not out anything. Once delivery's made, they take off the hedge, but they're net neutral zero. All they have is a locked-in price and their commission and nothing else. So a real metals dealer, they could be certainly bullish to metals. I know Andy is. I've known him for years. But from the business perspective, they're a neutral party. They are selling for the bid-ask spread, and that's how their business is run. And they try to get cute about where the price of silver is going the next day or the next week or the next month, they'll quickly find themselves out of business. So that's what a hedge is. But when you look at what's going on with the system as it exists right now, it's not hedging. They wouldn't be so worried. They wouldn't change the prospectus on the iShares and the Aberdeen Silver Trust if they were just hedged. There'd be no reason to. They'd be net neutral, but they're not. They're heavily short. And they're probably considering what else they might do besides change the prospectus on those two major silver ETPs.
Yeah. Yeah. So that's an interesting point. So they shouldn't really care about the price of anything, whether it's stocks or anything else. And yet they do care a lot, it would appear, although they feign indifference to it, right?
Oh, right. I mean, it's okay for them to sell as much as they want of what doesn't exist, but they have limits on how much you can physically take. And then they can sell as much as whatever they want that doesn't exist. I'm not just talking silver or gold. I'm talking, shorts on the stock exchange and shorts in the mining shares and, the system at large. It's all run basically the same way. But you get a little bit of pushback from, let's say, the little people. We better investigate those Wall Street bets guys. We better investigate this collusion of these people that want to buy physical silver. How dare they mess with our market, which is so ludicrous and very much upsetting. I mean, the idea that, there's some fairness and there's equal this and, the idea of equal opportunity, not equal outcome, but, they skew the outcome to where they can never lose. If they make a bad bet, the Federal Reserve comes and bail them out. There's nothing more classic than long-term capital management. I mean, they were the premier prognosticators of what the human behavior in the financial markets would be for like 4 years. They predicted human financial behavior very accurately until they didn't, and then they blew up.
Yep. Yeah, well, all these schemes work until they stop working, right, David? And then the market eventually will win out and they can play with it. And they've been doing it for a long time now, but sometimes there's appearances that they might be losing control, right?
Absolutely. I mean, I gave this analogy on the As Good as Gold interview, but in The Big Short, when Burry got Goldman to write that, and then he said, I want a policy on you. And they just laughed. Like, you could go under, and of course, he was straight-faced about it. But during that movie, things progressed and, he's tormented by the market going against him, even though he knew he was right. And then that day came where I think it was Countrywide Financial or something blew up, and it was major headlines across the financial media all over the place. And yet their position actually went against them somewhat. And all of them that were on that side, Burry and everyone, that had an account with him, but, other players that went with him, as you see in the movie, are all baffled about how can this be. And then what actually happened was according to the movie, is that one of these banks or so, maybe more, decided they weren't on the correct side. Now it's obvious what is going to happen. Let's just make sure we're positioned correctly. And then the market started to crash. So, this is unfair, unethical, immoral, just plain wrong. But that's the system we're in.
And I think we'll leave it at that. So go over to themorganreport.com and sign up there. Sign up for the newsletter. I think you'll get a lot of valuable information out of David Morgan, as I have the past decade. And David, appreciate you coming on. Any questions for David, send me an email to kl@kerrylutz.com. I'll forward it off to him and get you a response. And the email address is kl@kerrylutz.com. Go to FSN, Financial Survival Network, and sign up for the free newsletter. David, we'll talk to you again real soon, and hopefully after we have $30 silver.
Okay, fair enough, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.